Benchmarks declined for the third straight day as investors booked profit a day ahead of the RBI's monetary policy outcome. Sensex fell 793 points intraday before closing 568 points lower at 55,107. Though the Nifty too slipped 153 points, it did manage to hold on to the crucial 16,400 mark. So what weighed on investor sentiment today? The street anxiously awaited the result of RBI's MPC meet. The RBI is likely to hike interest rates by another 40 to 50 basis points to rein in inflation. Persistent rise in crude oil prices is a cause of concern for investors. The street is keeping a close eye on CPI inflation and also US inflation, which is expected on Friday. Consumer durables, realty, IT and financials among the worst hit pockets, with Titan, UPL, Dr. Reddy's, Britannia, L&T shedding between 3 to 4%. Meanwhile, insurance behemoth LIC continue to disappoint, shares hitting an all-time low at 751. At the current level, the stock is available at a discount of around 21% to its IPO price. Finance Minister Nirmala Sitharaman has hailed retail investors in the equity market, saying they are playing the role of shock absorbers at a time foreign portfolio investors are pulling out of India. The minister said the pandemic witnessed a very significant increase in retail investor numbers. Listen in to the FM speak at the Azadi Ka Amrit Mahotsav celebrations.
During the pandemic, the very significant increase in retail investor numbers in India. In fact, there are times when I've answered even in the parliament that if FPIs are going away and coming into the country as and when and giving us a feeling that funds are going out of India, retail investors in India have come in a big way that they seem to act like the shock observers. If FPIs went away, FIIs went away, our markets did not really have to show the ups and downs in a very distinct way, because the small investors in the country have come in a big way, trickling into the country. And that is one of I would think, in the 75th year for us to be able to say that Indian investors, the small and the big and everybody, are coming into the market and coming in with greater awareness.
Oil companies outperformed in the weak market. Higher crude oil prices and benchmark Singapore gross refining margins hitting a record high buoyed the stocks. The OMCs were a happy bunch today, also on the back of reports suggesting that India is looking to double down on its Russian oil imports. The state-owned refiners are now more eager to take heavily discounted supplies from Rosneft. As per reports, India is looking to finalize and secure new 6-month supply contracts. ONGC rose nearly 5% in trade today. Bangalore Refinery in Petrochem was up a whopping 20% and Chennai Petroleum 14% in trade. Pharma major Dr. Reddy's down over 3% on fear of increased competition. Credit Suisse has come up with a report which says that there is a new competitor for Suboxone, which is an important product for the company. Aveva, an affiliate of pharma company Apotex, has received the ANDA approval for Suboxone. Moreover, Aveva can potentially be launched immediately, which will cause more competition for Dr. Reddy's. As per Credit Suisse, the impact on Dr. Reddy's would be through lower pricing. Brokerage house has also initiated a neutral rating for DRL with a target price of 4,465 rupees. Shares of PB Fintech, the parent company of Policy Bazaar, nosedived nearly 12% after the company's CEO, Yashish Dahiya, sold over 37 lakh shares via bulk deals. In fact, the shares are a downward slope for the past 1 week, tumbling over 12%. Post the share sale, Dahiya's stock holding has declined to about 4.6% from around 5.45% currently. As per company, the proceeds from this share sale will be used to meet tax expenses on ESOP gains for the chairman. The fintech major assured investors that no further share sales are planned for at least 1 year.